There's a bit of a recovery in the Australian market. What do you put it down to?
It was a really good day for the Aussie market, up by 1%, and we saw some good volumes going through. So it does look like people are back at work. $4.6 billion worth of stock being traded today. But really, as John mentioned, it is all about the stabilisation in emerging markets. That massive move that we saw from Turkey overnight, 425 basis point hike, taking interest rates there to a massive 12%. And of course, the Indian Central Bank also coming out and raising its rates by 25 basis points up to 8%. So that really stabilised markets around the region. We saw a positive performance, especially by the Japanese market, the Australian market, all doing quite well. And if we have a look in terms of sector performances, we saw every single sector trading higher, with the one exception of the telecom space. The best was the materials and the consumer discretionary. And looking at stocks as well, we saw some highs being hit today. CSR, Oz Forex, Drill Search, all hitting 52-week highs. There were also some stocks reaching 52-week lows, and this is interesting because we saw Virgin reaching a 52-week low. We also saw the agricultural company GrainCorp hitting a 52-week low, and we saw Paperlinks hitting a 52-week low as well. So some big moves on the market, but overall a great day for the Aussie share market and some good volumes too.
Take a look at Forge Group, which was certainly one of the worst performers on the market today, down by about 9% on the back of yet another downgrade. Could there be even more bad news still to come from Forge?
Well, we thought that the downgrade back over in November and the bad news in November might have been the last, but we've seen a continuation of the bad news coming through for Forge, and the share's down 8.9% today. They have come out with full-year guidance, so they do expect to see an EBITDA loss of between $20 to $35 million, and that's starkly different from the EBITDA profit of $45 to $50 million that we're predicting previously. Now, it looks like they've seen even more cost pressures coming through, particularly from the Pilbara Logistics joint venture, where the two projects there are unprofitable. One of the projects is finished, one still has another 3 months to completion, and really this brings into question their existing projects and their ability to execute on those projects. So I guess a lot of nervousness around Forge at the moment. Confidence has once again been eroded, and we are seeing both cost as well as margin pressures here.
Back to you, Julia, and a bit of a bright spot at least today was Drill Search after a production upgrade. What's your view on that one?
It was quite a big production upgrade. We did see full-year production guidance lifted by around about 1 million barrels, and predicting 3 to 3.3 million barrels of oil. And if we have a look at what they were predicting previously, 2.3 to 2.5 million barrels. Now, this is really due to the Western Flank oil project. It's operated by Beach Petroleum, and it's 60% owned by Drill Search. So that's been great news for Drill Search shares. We've seen a strong rise today, but of course Beach Petroleum is the other participant in that project and the operator. So we also saw a great day for Beach, up by 4.7%.